Good question from Shanika. Aren't conventional loans better than FHA loans? I'm gonna tell you this: the best loan is gonna be the loan that you can get when you're ready to make a move, right? But at the same time, I believe in strategizing. I believe in putting ourselves in position to get the best that we can get. Because you don't want to rush into anything. You definitely don't want to rush into a home. Um, but with that being said, there are pros and cons to the different loans out there. So with a conventional loan, yeah, a conventional loan. What does it mean to be a conventional loan? It means that it's the loan that has no government interference. Not like, okay, you have government sponsored loans like Fannie Mae, like Freddie Mac, like the FHA loan. These are government sponsored, government insured loans. The conventional loan doesn't have that. So without having that government backing, people are able to purchase properties in certain conditions that they wouldn't be able to purchase if they had an FHA loan. So in some senses, FA or the conventional is better. It's also, if you ask me, it does have its pros, meaning that when you pay a mortgage, you're paying your principal, your interest, your taxes, and insurance. And in most cases, you're also going to be paying your private mortgage insurance. It might say PMI or it might say MIP if you're going with FHA. But this PMI is insurance that you pay on behalf of the lender in the case that you were to default on your loan. That means if you get foreclosed on, the lender will still get their money. And depending on the price, it can be very significant. In some cases, I've seen, people paying an extra $80 per month for insurance. It doesn't benefit them. With an FHA loan, that PMI never falls off. You're going to pay that. If it's $80 a month, you're going to pay it for the life of your loan. It could be a last payment in the 30th year. You're going to be paying that $80. With a conventional loan, in most cases, conventional loan, you can put 20% down and not have to pay that PMI. Or if you put less than 20% down, that PMI falls off once you pay 21% towards the equity. So once you paid off about 21% of the house, you can apply to have that PMI taken off. They don't do it automatically. You have to ask for it. Now, there are loans out there that don't have PMI. But ultimately, like I said, the best loan is the loan that you can get right now. FHA, it is challenging to buy a house, period, but it's doubly challenging with an FHA loan because we're finding ourselves in this market that lenders do not want to, not lenders, I'm sorry, sellers. If I'm a seller and I have, 7 offers on the table, I'm going to choose the offer that gives me the most money in the fastest time with the least hassle. And so when people see FHA loan, they automatically think, oh man, extra inspection. And if I don't have to deal with that extra inspection, I'm not going to. And so FHA buyers, home buyers right now are finding themselves close to the bottom of the totem pole when it comes down to a multiple offer situation. Some people say it's discriminatory, which, at the end of the day, this is America and people have the right to make the decisions that are going to put them in the best position. And for a lot of sellers right now, that means not risking an extra inspection and slowing up their process. So if you can go conventional, go conventional. But if you can't go conventional, do what you got to do. It's okay to go FHA. We have people closing on FHA homes nearly every week, every other week right now. At Pasker real estate is going down. Either or, it don't matter. Where there's a will, there's a way. And if you bring the will, we know the way. Me and my team, shout out to them. It goes down. Come on with it. I'm waiting on you. It's a good time to get in now. Get in before that spring rush, because it's about to go down. And interest rates are going up. I got a text from one of my lender partners. And interest rates are about to touch 4%. And she had one that went for 3.99% for someone that had A1 credit and had a lot of cash. The interest rate was still 3.99%. So that's up. Because, I know people this year that have gotten, homes with 2.8, 3.1, 3.25% interest rates. And so if you don't know, if you're paying more interest, that means you're paying less principal, which means that the purchase price of the house is going to be less because your buying power goes down. So the longer you wait, you might wait. If you had a hard time finding a house last year, imagine trying to find a house when your price point is lower. Tough. We got a good question from Shay Q. Okay.